Okay, this video is for 16.4. 16.4 is going to talk about recording closing entries for income statement accounts. And so our one objective for this section is to be able to prepare closing entries. So first of all, a corporation is going to record 4 closing entries. So you will need to know these 4 closing entries. First, there will be a closing entry for income statement accounts that have credit balances. These accounts are going to be our revenue and our contra cost accounts. Second, we're going to have closing entries for income statement accounts that have debit balances. This will be our cost, our contra revenue, and our expense accounts. Number 3, we're going to have a closing entry to record our net income or a net loss in the retained earnings account and close the income summary. So number 3 is actually going to do 2 things. It records our net income or net loss, and at the same time, it will close our income summary account. Number 4, we're going to have a closing entry for our dividends account. So first they're showing us our income summary. Our income summary, we have our debit side, we have our credit side. Revenue, if our revenue is greater than our expenses, and then our expenses over here, and we have our credit balance, would be our net income. So really what this is doing is it's showing us if we have a net income. I want you to remember that this can be different because our income summary is not always going to be expenses on the left and revenue on the right. It depends on if we have a net income or a net loss. So first, we're looking at our closing entry for accounts that have credit balances. Now, remember, they should have up here too, these are our income statement accounts that have credit balances. And so when we look here, we have our sales. And so our sales has a balance here. We are going to close our sales. And so to do that, we're going to debit sales, and we are going to it doesn't show us here. We'll look at the next one. What I want to say about sales, though, is we want to keep track of what we have for each fiscal period. And so that's why we are closing our sales account, is so that we can keep track then for the next year what we have in sales. So here we're looking at closing our sales account. We are also then closing our purchases discount. We're closing our purchases, returns, and allowances, and our interest income. So all 4 of those accounts have credit balances, and we are closing them. And so when we look at our actual closing entry, notice it's a lot like our adjusting entries. We have this label of closing entries up here at the top. We are going to close those 4 accounts that have credit balances, and to close them, we are going to debit those accounts. So that's why we have those 4 listed first with debits, and then we are going to credit our income summary for the total amount. Next, we're going to look at our income statement accounts that have debit balances, and we are going to close those. And so here they're showing us on this is our trial balance here. And so we see these accounts that have debit balances, we are going to be closing them. Now, to close an account that has a debit balance, we are going to credit that account. So here, this is usually a long transaction. There's usually quite a few accounts that we're going to have to list because this is all of our expense accounts. And usually we have quite a few expense accounts. So what I do is I usually write in my income summary because that's the account that we're going to debit. And then I write in all of those accounts that we're going to close. I put those totals in there. So I'm going to credit all of those accounts I'm closing. Once I have all of those in, I'm going to add those up to figure out how much I'm going to debit to income summary. Okay, next what I'm going to do is I'm going to close my income statement accounts that have debit balances. Well, that's what we did on that one. So this has the wrong heading. I feel like this PowerPoint is kind of all messed up. And so really what we're doing for this one, for our third closing entry, we are going to record our net income or our net loss. And at the same time, what that does is it's going to close our income summary. Now, the difficult part of looking at closing income summary is because when I go back to this transaction, and I'm going to go back one more, this transaction, both of those transactions have income summary in them, and we have not posted those yet. And so it's hard for us to know our balance to income summary. What I would say is easier for me is to know that we are recording our net income or our net loss. We are going to record that net income or that net loss into our retained earnings. And so that's why we see retained earnings here. Now, what we're going to do is we are going to debit income summary and we're going to credit retained earnings, because when we look at our income summary account up here, to close it, we need to debit income summary to get that account down to 0. And then we would credit our retained earnings. Heads up on this one though, this account or this transaction does not always look like this. There are going to be times where we're going to debit our retained earnings and we're going to credit our income summary. It all will depend on if we have a net income or a net loss. Okay, then we are going to make our closing entry for our dividends. Dividends also is going to affect our retained earnings. And so here they're showing us our T account for our dividends account. And so to close dividends, we need to credit dividends. And once we credit dividends, we have to debit our retained earnings, okay? So the way that I think about this is dividends is something that's going to lower our retained earnings, and lowering our retained earnings is going to be a debit to retained earnings. This is showing us then our completed closing entries for a corporation. So notice this, it's quite long, especially that second closing entry. Number 1, where is the information obtained to journalize closing entries for revenue, cost, and expenses? We're going to get that information from the adjusted trial balance. Number 2, what is the name of the temporary account that is used to summarize the closing entries for revenue, costs, and expenses? That account is going to be our income summary. And remember, the balance of our income summary is going to depend on if we have a net income or a net loss. Okay, this is the end of 16.4. You can now go on to the 16.4 work together.